Hi and welcome to DNB Carnegie in our interview with Ependion. My name is Markus Almerud. I'm an analyst here at the bank. I got with me Jenny Sjödahl, who is CEO at Ependion. Hi, Jenny.
Hi there.
So you just released Q2 earnings. I think a good report overall. Maybe starting with the order intake in the market. You saw 17% growth, excluding acquisitions and FX. So continues to be good, but at the same time, the uncertainty that we have seen remains. So maybe tell us a little bit about demand. What are you seeing on the ground?
Yeah, so we do see a little bit of a mixed picture still. As you mentioned, the uncertainty is still there with the trade barriers still being there, very present, which has a certain effect on our customers. Some projects are being delayed or postponed, but at the same time, our customers are continuing with their business. We see a pretty strong pipeline in both business entities. We are working close to our customers. So I would say that the demand situation is okay. It's not super strong, but it's still on an okay level. And what I think is positive also is that in Beijer Electronics, we see an order intake growth, despite the fact that we have been phasing out part of the product portfolio as part of the strategy. So overall, I think a decent level.
Mm-hmm. And it's interesting to see that the order level is actually picking up if you look trend-wise for the past couple of quarters. And if we go to sales, we're seeing a different pattern. So sales still fall, but they're now in line. So you have order and sales now being balanced. And all else equal, you should move that, sales should move in line with orders going forward, right?
Yes, definitely. That's how it should work, yes.
Yeah. And maybe go into the segments and maybe starting with the segments where we started for the group. You grow in train and track, energy is stable. Again, here, what do you see if you go specifically into those buckets?
Yeah, we do see steady demand from if we start with the train segment for Westermo, we know that order intake can vary quite a lot between quarters, depending on which customers are placing larger orders in a particular quarter. But overall, I think that we see a stable development there. There is still projects happening, investments being made into passenger and goods rail traffic. So a stable development there, and we have a rather strong and diverse customer base on that side. Track side, I think there's still more to be done. Track side is driven by quite a lot of legislation, regulations, especially in the European Union. And there is a lot of legislation coming up now in the coming years, which will drive investment in trackside as well. But we have not seen it taken off just now as much as we are expecting in the future, but still on a decent level. And then when it comes to energy, of course, investments are happening. We are still, working with our customers, finding new customers. And I think that with the addition of Welotec, who brings very strong customer relationships also in the energy sector, I think that there is positive prospects going forward there as well.
Mm-hmm. And obviously, I mean, train being the biggest segment of yours, that's the main driver at the moment, you would say, of the order intake that you're seeing.
Yes, that's correct.
And maybe we stop by Welotec for a second. It's been integrated since a month. How is the integration going, and how is orders and underlying sales looking for Welotec where we stand right now? I know that you had a big sales month in June, but apart from that.
Yeah, we see Welotec developing the way we expected. In the past, they have been growing by some 10% per year on average, and we expect that to continue. Very good start in the Westermo family, very good teamwork and collaboration, especially on the sales side, which is where we are really focusing our integration activities now in the beginning. So yeah, I think we're going to see a stable development from Welotec, and also a great addition when it comes to completing the portfolio for Westermo into the energy segment. So very positive start there.
Mm-hmm. And looking at the margin, you had some integration costs and some acquisition-related costs in the quarter, but the margin is still above 15%. So the underlying sales that is excluding Welotec is falling, but you defend the margin, you keep the margin above 15%. How should we think of the margin going forward, especially with Welotec coming in at a little lower level than you have for the average in the rest of the segment?
Yeah, I think we know that Welotec has a somewhat, in general, on average, a little bit lower margin than the rest of Westermo. But as we grow the volume and as we start working together and find synergies, we think that we can work with that margin level going forward. So I don't see a big dilution effect from Welotec coming in. And on the other side, the old Westermo, so to say, is showing strong development on the gross margin side. We had negative FX effects also in the quarter, and as you said, the M&A activities. So the underlying profitability level is actually quite strong, I would say.
So that because you have been working a lot with the cost base for the past couple of years, and then especially coming out of the component crisis, you took down cost quite a lot, and you worked with the manufacturing base. Is this what we're seeing right now? So you said that you're definitely at a higher level in terms of profitability for Westermo.
Yeah, we are at the higher gross margin, inherent gross margin level, thanks to the efforts that we have done, especially in our supply chain. Material costs have come down. We have adjusted our manufacturing facilities to the volume that we have right now, and we have found quite a lot of efficiency gains, and there's still more to be done, but we are working very diligently with those things, and that has actually given result in terms of the gross margin level.
Mm-hmm. If we move on to Beijer Electronics, which has been less stable than Westermo has, you've now fully launched the new product family, the X3. You've launched the web version in Q4 and Q1. What is the response so far? What is your expectations regarding the launch as we go into the fall?
Yeah, I think we have quite high expectations on this launch because we do feel that this new generation is very suitable to what our customers in our focus segments are looking for. It's a brand new modern product portfolio, and we do receive very good feedback from customers that are initially now ordering a few pieces, to do some testing, and eventually that will move into real orders and real business. So far so good. I think the reception of the new product range, and especially of course with the addition of the web capability with Web IQ and the web adjusted panels is really a step forward as well. So positive launch sentiment so far.
And it's ready for orders, you're right, but sales are limited so far. But still, you see positive uptick, and you see growth in Asia driven by China. What is driving that?
Yeah, and that has not been affected so far or helped by the new generation. That is more our X2 series that is actually picking up from low levels. We should remember. I mean, the volumes from Asia have been extremely low now for more than a year, and now we see that activity level picking up both in China but also in the rest of Asia Pacific region from low levels, but still it's moving in the right direction.
And if we look at the end markets, the big end markets for you here is manufacturing, is marine. So what is happening in manufacturing marine?
I think in Asia, I think it's a lot about the manufacturing segment that is coming back somewhat, so that is good. In the marine segment, we definitely see good development as well, driven more by Europe. Where we have strong relationships with customers, we see that our offering is really suitable for the marine segment. So working closely with customers there is paying off as well. So yeah, it's moving in the right direction, definitely.
But is it fair to say that marine, because marine has been good for the past quarters, that you see marine is kind of moving along, whereas manufacturing maybe has seen kind of a pickup? Is that fair?
Yeah, that is fair. Marine has been more stable, a stable uptick for quite some time now, while manufacturing has been on a very low level and is starting to show some signs of recovery, especially in Asia.
And about the cost cutting, so when you released the Q1, you took some measures in terms of cutting cost in Beijer Electronics. How is that progressing?
No, that is progressing well. I mean, that cost has been taken out. It was taken out already in the first quarter itself. So now we are seeing the results, so to say, of a lower cost level. However, of course, with the volume coming down, we don't really get the leverage out of that as we would want to see. But I think that we are well positioned now as volumes hopefully start coming up to really get some leverage out of that lower cost base.
And stopping at the margin there, because I think you said at the call that we should expect a gradually higher gross margin in Beijer Electronics going forward, and we did see a lift in the gross margin from both from Q4 and Q1. Is it the volumes which is driving this, or is it cost, or is it both?
I think now it's more of a volume game, because the most of the gross margin effect that we have from the phasing out of the low margin products has actually been showing up already now in the second quarter. So now it's more about focusing on segments where we can really get the premium price, because our offering is suitable to those segments. But also the volume effect, of course, will have a positive effect on the gross margins as well.
With that, Jenny, I'm looking forward to seeing how Welotec is going to progress, and then also about what X3 is going to give, and then continuous margin increase in Beijer Electronics. So with that, I say thank you very much and have a good summer, and speak to you soon.
Thank you very much, Markus.